Hey guys, what is up? Welcome back to my Robinhood portfolio. Hope you guys are having a great Labor Day weekend. Sort of a double-edged sword from my perspective. While I don't necessarily have to go to work today, the markets are also closed, and there's been a few different trades I've been wanting to get in, and unfortunately I'll have to wait another day. So it's nice to be off work, but I'd love to get in and do some trading. And since the trading day is done, I thought I'd do a little bit different video today. I may do a little bit more of this moving forward as well. I kind of want to talk about my overall investing strategy. So as a lot of you know from my prior videos, I'm a new investor, a neophyte investor, if you will. I'm not completely sophisticated in the investing arena. There's still a lot I have to learn. I think there's a lot everybody has to learn, but especially for me being a new investor. That's kind of why I've been posting these videos, to kind of collaborate and form a community of investors who are new and have different ideas about stock picks and just kind of advice jumping into a market as a new investor. What I want to focus today is about dividends. So I've been jumping into the market, buying individual stock securities, bond funds, kind of focusing on dividends. So I kind of wanted to talk about dividends, what my strategy is, and why I focused on that strategy. So a dividend is simply a distribution of a company's earnings decided by the board of directors, and it's typically a cash payment, although I think in rare instances there's some stock payments, some other property payments as well. But for the most part, it's cash payments. And a dividend, there's a number of different metrics how you can qualify those. A dividend rate, basically how much money per share the company gives back to its shareholders, or a dividend yield, kind of the percentage of the market price of that company's particular stock. So a little bit of different way of looking at the same thing, essentially, the kind of focus on dividends. And the companies, there's a number of different companies that give dividends. Typically, they're larger companies, well-established companies. The newer companies, especially like biotech and technology companies, I've noticed, don't really give dividends. And I think that's probably because they're trying to invest in the company rather than giving that profit back to the shareholder. So they're trying to grow the company in its infancy, and they need that extra capital to grow the company. Uh, there's a number of different dividend aristocrats. These are companies that are larger cap companies that have a great track record of paying dividends. And I think the definition is like 20 or 25 years of consecutive dividend payouts. And these companies, there's a list here you can kind of see here. A few stocks I own actually up at the top there. Abbott Laboratories. If you kind of go down, Chevron, it's a company I've been looking at. Coca-Cola I recently purchased. AT&T, like I said, Cisco, T. Rowe Price, 3M. So a lot of large cap companies, well-established companies go into the dividend aristocrats. And like I mentioned earlier, there's a number of different ways to kind of jumping in and getting the rewards of dividend investing. Dividend mutual funds, excuse me, dividend ETFs. I have both of those in my E-Trade account, but with the no commission fees on Robinhood, I'd like to kind of go in and buy and sell individual securities, stocks. That's kind of why I brought up that dividend aristocrat list there. I think it's more fun. So why am I actually going in and focusing on this particular strategy? Well, there's a number of different reasons. That's just a little aristocrat picture I thought I'd throw in there. A number of different benefits to investing in dividends. So number one, it's essentially passive income. So once you get a good diversified portfolio of high dividend yielding stocks together, that income's going to be there month in and month out. And you can see this from this little graph here, that blue line there, your investment return over your expenses in yellow. Once your dividend growth or dividend payments are outpacing your expenses, you're essentially living free. I mean, you could quit your traditional income earning job and live off your dividends. And you can see your net worth there in blue starts to rise as well. So you can put more money back into investment, and essentially your investment return grows in an exponential fashion there. So that's one reason to doing it. It's kind of an investment strategy long term. So initially up front when you're younger, put in a lot of investment, and then when you get older, those investments start giving you back a nice return to the point of essentially supporting your lifestyle, if you will. Also, I think dividend companies are larger companies, well-established companies, so essentially they're very profitable. They have really good PE ratios. They're at the point where they can, if they can afford giving you a dividend, that means they're very healthy companies as well. Again, that doesn't hold true for all companies, and more well-established investors may disagree with that sentiment, but I think companies with high dividend yields are great companies that have a long-term potential. And Warren Buffett, he owns quite a few of these companies like Coca-Cola, Wells Fargo, IBM, Walmart, American Express, and essentially his strategy is buying good companies and essentially holding them forever. You forget about them. And with that passive income, you can do that with these dividend companies. Also, it's kind of a hedge against the market because a lot of these dividend yielding companies, especially the dividend yielding aristocrat companies, they have very low volatility. Their market price doesn't jump up and down quite as much as other companies. So you can kind of hedge against the market, and even if the market does go down and you lose a lot in capital equity, you're still going to get a dividend payout. And some may argue, well, if the company tanks, they're not going to give a dividend payout. But the whole definition of an aristocrat is it's been giving a dividend payment for 20, 25 years. So even back in 2008, for example, when the market went down, these companies were still giving dividends. Yes, they may be a little bit less, but still some passive income. So for all of those reasons, that's kind of why I've been focusing on dividend payouts here, dividend yielding stocks. So yeah, let me know what you think. Is this a good strategy? Is this not a good strategy? Again, I kind of don't want to go into risky strategies. I've been trying a few different things here, dividend capture strategy. But I think as I move away from my ETFs and mutual funds, I think focusing on high dividend yielding securities is what I'm going to be doing first. I did a speculative play with Portola and Pfizer, small cap pharmaceutical company without a dividend, and that kind of burned me. So I think I'm going to invest a lot of my equity for the next few months anyway into high dividend yielding stocks that you guys suggest, as well as some of my own research, and kind of see how that plays out. So yeah, that's what I wanted to talk about in this video. As always, subscribe. It really helps me out a lot. Give me a thumbs up. Give me some comments. Tell me what stocks to buy, what your perspective on investing is. Is this a good strategy or not? Really appreciate that. And the whole idea behind these videos is to get a community together. Excuse me, I can't talk. To kind of learn how to invest and what kind of strategies you guys are bringing to your investment portfolio. So again, leave me a like, leave me a comment, subscribe, and we'll see you guys next time.